Ladies and gentlemen, good day, and welcome to the H1 FY25 Sathlokhar Synergies ENC Global Limited conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Kajal Gowda. Thank you, and over to you, ma'am.
Thank you. I am Kajal Gowda from Akmil Advisors. I welcome you all to the earnings call of Sathlokhar Synergies ENC Global Limited. Today, we have with us Mr. Gopalakrishnan Tyagu, the Managing Director, Mrs. Sangeeta Tyagu, Whole-Time Director, Mr. Vigneshwaran, Independent Director, and Mr. Hitesh, Statutory Auditor. Now, I hand over the call to Mrs. Sangeeta. Over to you, ma'am.
Yeah, thank you, Kajal. Good afternoon, everyone, and welcome to our H1 FY25 earnings call. Thank you for joining us today to review our company's performance and discuss the progress we have made so far this half year. It is an honor to be here with our valued investors and stakeholders who continue to support us on this journey. About the company and performance highlights. At Sathlokhar, we are dedicated to excellence and innovation in the EPC and infrastructure sector. A comprehensive service portfolio spans industrial, warehouse, commercial, institutional, healthcare, and solar projects, positioning us as a reliable partner for both public and private sector clients. Leveraging our in-house expertise across mechanical, electrical, and plumbing, solar installations, HVAC, and office interiors, we manage every aspect of the project lifecycle from planning and design through execution and commissioning. Our listing on NSE emerged on 6 August 2024 marked a significant milestone in our growth journey, setting the stage for our continued success. The exceptional results which we have achieved since then underscore our strong commitment to excellence and relentless drive for innovation. With our comprehensive end-to-end project management capabilities, we are empowered to deliver high-quality solutions efficiently and at competitive cost. Comparing our performance with H1 FY24, we are proud to report significant growth across all key financial metrics. Our total revenue surged from 4,657.30 lakhs to 14,250.98 lakhs, a year-on-year growth of 205.99%, while EBITDA increased from 561.57 lakhs to 2,334.88 lakhs, a growth of 315.78%, with the EBITDA margin expanding from 12.06% to 16.38%, reflecting improved operational efficiency. Our PAT grew from 387.67 lakhs to 1,644.65 lakhs, a year-on increase of 324.31%, with the PAT margin strengthening from 8.32% to 11.54%. These achievements highlight the strength of our strategic initiatives and our dedication to delivering sustained value to our shareholders. About our ongoing projects and order book strength. Our growth is a testament to the unwavering dedication of our team and the confidence our clients place in Sathlokhar as a trusted partner for executing large-scale, high-quality projects. With a robust order book of 761.06 crores and 141.37 crores built through September of this year, we are on track to achieve an additional 260.63 crores in the second half of the year, targeting a total billing of 402 crores for the financial year 24-25. A strong position as an authorized channel partner for Tata Power Solar Systems Limited has enabled us to capitalize on the growing demand for sustainable energy solutions, adding substantial value to our project portfolio and enhancing our competitive edge in the market. Operational efficiency and strategic focus. One of our key strengths is our in-house integrated operational model, which allows us to streamline project delivery and reduce reliance on third parties. Our project teams are equipped to manage every phase from concept to completion, and our expertise in civil engineering, MEP installations, and solar projects has enabled us to maintain a high quality standard. As we move forward, our focus remains on providing innovative, sustainable solutions that address the dynamic needs of our clients. Our expertise spans a wide range of services in EPC turnkey construction, from civil and PEB to MEP, IDMS, utilities, office interiors, and solar projects. We are dedicated to playing a significant role in the growth of India's infrastructure while consistently upholding our commitment to quality and customer satisfaction. With a strong financial foundation, we are well positioned to seize opportunities in rapidly expanding sectors, including EPC turnkey solutions for industrial buildings, warehouse, logistic parks, commercial and institutional facilities, hospitals, hotels, and solar energy projects. In alignment with this, we aim to broaden our footprint across various regions and sectors by enhancing our focus on high growth areas such as solar and industrial warehousing and exploring joint ventures in MEP and interior projects. We are positioning ourselves to capture a larger share of the market. Furthermore, our strategic emphasis on larger projects will help optimize fixed costs and create operational efficiency that drive higher profitability. To conclude, I want to emphasize that our performance in the first half of FY25 is a testament to the hard work and dedication of our team and the effectiveness of our business model. With a robust order book, strong financial metrics, and a growing reputation as a trusted EPC partner, we are well prepared for continued success. Our commitment to shareholder value remains paramount, and we are excited to explore new avenues of growth while building on our legacy of operational excellence and project execution. I'm incredibly optimistic about the road ahead, and I'm confident that Sathlokhar Synergy ENC Global Limited is positioned to capitalize on emerging opportunities. Thank you once again for your support and confidence in our journey. We would like to now take the questions from our investors.
Thank you very much.
Happy afternoon. This is Tiago here now. Yeah.
We will now begin the question and answer session.
Yeah. Go ahead, sir.
Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you have any questions, please press star and 1. Our first question comes from Agastya Dave from CAO Capital. Please go ahead.
Thank you very much. Am I audible?
Yeah, you are audible, sir. Happy afternoon. This is Tiago here, Sathlokhar.
No, sir. Sir, first of all, I would like to thank you and madam for a very comprehensive pre-IPO meet that you did, and a lot of the questions regarding the business model and the past history of the company, they were very nicely taken by both of you, and those were very useful. You were a very fresh, a new company, which I had not even heard about, but those are very critical to build a proper understanding before investing in the company post-listing. So thank you very much for that. Congratulations.
Thank you so much, sir. Yeah. Go ahead, sir.
Congratulations for an excellent first half. Sir, I have two questions. One is, you have surprised at least me on the margins. The margins have come in at 16%, which is more than what I was expecting. So can you give some commentary on what factors led to better margins? And also, how do you see this margin trajectory going forward as your scale increases further? So what is an upper limit or a ceiling for these margins to reach?
Sir, actually, post-IPO, and we have strong financial strength, we could be able to negotiate better from our vendors by paying upfront payments, and then it's purely a better negotiation, sir. Instead of taking credit, we are trying to minimize the procurement costs.
So these margins are sustainable, sir. Should we put in a base of 16% margins going forward?
So as such, no, we are trying to do our best, and we would like to scale up our EBITDA margin gradually, sir. Yes, we are working towards that, sir.
Great, sir. So further improvements are possible, sir?
Yeah, we are sincerely taking efforts to increase our net margin. Yes.
Excellent, sir. So my second question is, you have mentioned in the press release that you are participating in certain number of tenders and projects which are in the pipeline. And you have mentioned a win rate. So historically, what is your success rate in winning the bids? You have mentioned, I believe, 15%.
Yeah, 15% we have mentioned. And as such, in the past also, we were able to achieve whatever we have bidded. Our success rate in the 2 to 3 years before 12% and scaled up to 15%. Even this year, we are trying to further improve, and we would like to understand as the earlier years, like wherein some of the locations where we are unable to give bank guarantees prior to IPO. Now that since we have got financially sound position, we've been in a position to increase our success rate gradually, sir. Yeah.
Great, sir. So thank you very much, sir, and congratulations again, sir. Best of luck.
Thank you so much, sir.
Thank you. The next question comes from Sridhar Jadhav from GMFL. Please go ahead.
Sir, am I audible?
Yeah, you are audible, sir. Happy afternoon. Yeah, tell me, sir.
Yeah. So congratulations on a good set of results. So my first question is, sir, how do we look at your business? Is it like on a year-on-year basis or on a half-year to half-year basis?
No, as a company, we are looking forward to increase our sales at least 40 to 50%. That's a commitment. As a company, we are trying to achieve, and I'm sure when we compare the last year performance of 247 crore, and we are aiming to achieve our goal of 402, which is 53%. That's what I understand, from 247 to 402. But we are pretty confident that we'll be in a position to achieve the set goal, sir.
Oh, okay. So my next question is more of a bookkeeping. Our debt has almost become nil from March 24 to September, but I can see that the interest costs have gone up to 1 crore when the debt has gone down. So any particular reason for that?
No, the reason, like I said, the booked orders from tidal government and some of the multinational companies wherein we forced to take bank guarantees, wherein we will be paying the we have earlier period we have not taken the bank funds, whereas now we started taking bank guarantees, and some of the area where we would like to increase that's the reason the bank interest is gone up. Otherwise, I don't for a simple reason that the order book from Winfast, it's a Vietnam-based company, and Xylus is a Switzerland-based company, and Reliance group of companies, and Tidal, all those companies are now looking at the bank guarantee. So we forced to take performance bank guarantee as well as the advanced bank guarantee. That's the reason we are able to spend that much money, sir. Yeah.
Okay. So then
If you look at the past performance prior to the last financial year, as a company, we never ever given bank guarantees to book any of the orders in the last 5 years. And this is the first year we have started giving advanced bank guarantee and performance bank guarantee to book the order. That's the reason we are able to do, and we are increasing the volumes and volume of the business. Yeah.
Okay. And sir, what would be, so your receivables for this period have gone up from almost 13 crore to 73 crore. So what is the typical collection period?
Actually, what happens is that in our business model, as a FN pre-IP also, once we book the order, and exactly on 9th month only, we will be in a position to bill. Until the certain stage, we are not in a position to bill, raise the bill. And if you look at our performance when it comes to September, out of 142 crores, we have billed 50 crore in the month of September. So that's the reason the outstanding is shown higher side.
Okay. And sir, very last basic question that I want to understand from a long-term vision perspective. Pan-India execution capabilities and, experience with good clientele like Reliance, SP Apparel, Godrej, etc., and having manpower handling capabilities. What is also long-term vision? Do you want to venture into solar EPC? Do you want to, venture more on the real estate side? What is your long-term vision?
Now, the plan is to have a greenfield projects. As such, as a company, we are pretty strong in EPC, design and build, construction of industrial and warehouse, logistics and hospital buildings. And we would like to strengthen the other region, like, extending the other states, and also increasing the MEP works like air conditioning, electrical, mechanical, plumbing, firefighting, integrated building management system, efficiency works and solar. That's the area where now increasingly, as I have mentioned pre-IPO also, earlier years we used to construct this skeleton. Nowadays, we would like to book orders as a turnkey wherein when the clients are handing on the paddy field, we would like to hand over the ribbon cutting. That's the kind of order booking we are looking at now. And as such, as we have mentioned, our advertisement, we have spent a lot of money and we are able to now capture we have attended 48,000 business call. Out of 48,000, around 12,000 potential business call. Even out of 12,000 business call, around 1,700 plus. As such, if you look at that, the 1,721 prospective future clients are lined up, wherein we have to again in touch with them to give design solutions and then quotation, then proceed. If you look at according to our company, the way in which we are progressing on the advertisement and the existing committee, as such, as my personal policy, I am looking at the day we have attained 300 clients, successful clients. I'm sure our 1 decade will go easily because each and every client in fourth year or third year or fifth year onwards, they would like to expand or they would like to go for a next building. So the moment we attain 300 clients, our growth of the company for next 1 decade is taken care. At this juncture, we have already achieved 68 plus projects and pipeline projects are around 19 projects are happening and lined up and offers submitted to 450 various clients worth of 5,795 crores. So if you look at that, we will be in a position to easily to connect before 2027 300 plus clients. Then obviously our past is ruling like each and every client will refer 4 more new clients. That's what I understand. So the moment we attain 300 plus clients, I'm sure 1,200 clients are taken care of our business requirements for next 1 or 2 days.
Okay, sir, understood. So basically, the existing market is extremely big for you, and so till the time you achieve, you would, you have a visibility of next 3-4 years. And sir, my last question would be, you mentioned that your current order book is 760 crores.
Yes. 760. Yeah.
Yeah, and we are on track to do 250 crores by H2 FY25.
Yeah, you are right.
Okay,
That's
sir.
the goal
Sir,
set
what would
by
be
the
the...
company. By doing that, we are achieving 63%, but though we are committed 40 to 50%, we are aiming to achieve 402 crores minimum. Yeah.
Okay, and sir, what would be guidance for FY26?
The same ratio, like for a minimum of 40% growth itself, it's a good number wherein if you look at the growth and then we have to look at the sustainability of the business. No, sir.
Okay. Thank you, sir. I'll come back in the queue.
Yeah.
Thank you. A reminder to all the participants, if you wish to register for questions, please press star and 1 on your touchtone phone. Our next question comes from Rajesh Vora from Jainmay Venture. Please go ahead.
Good afternoon, Mr. Tiago.
Happy afternoon. Yeah.
Happy afternoon. Congrats on very strong numbers. My first question is on Sathlokhar. What is the USP? How is it compared to the competition? What are our competitive advantages that your company has with you?
Sir, as I have explained, our company into EPC design, approvals and construction of various sectors such as industrial, institutional, commercial, hospitals, hotels and solar. The competitive advantage with respect to Sathlokhar, we don't subcontract to any of the disciplines pertaining to the project, which is civil, pre-engineering metal building, high tension, low tension electrical works, plumbing, firefighting, interior works and solar. So if you look at that, whoever is coming to Sathlokhar, they will be getting the one-stop solution wherein their hassle-free building construction and hand over the commitment which you have been signed off and the agreement is being honored. That's what we would like to say that. And as a company, we do have a sister concern to fabricate the pre-engineered metal buildings. And as a company, we do have authorized electrical contractor from the government of Tamil Nadu Electricity Board, and we are working with the Central Electricity Authority as well as Chief Electrical Inspector to government.
Okay, interesting. And you mentioned about the order win rate. Whatever you bid, you get 15 out of 100 contracts you win. So is this win rate very good? How is the competition? Who are your competitors in the area? Every order, when you don't get it, who gets it?
So actually, our focus is like with the respect to client, the aggressive clients. Example, to give you an example, we are flying down on Monday, Tuesday to Varanasi and even Odisha with our team members. And both the clients are asking us to construct a building in 5 to 6 months time. That's the area where we would like to know. See, as a company, we always pick up the projects, fast track projects, and we also look at though they commit 6 months, 7 months, obviously, our focus as a company, we like to book the orders within 12 months completion. That's the area we concentrate. Yes, sir.
Okay. No, so my question is, who are your competitors in this? Wherever since you win only 15 out of 100, who are the other companies who get this order?
So if you look at southern side, on Chennai region, URC Construction is our competitor. They are not public limited company, but they are real competitors. And then
Sorry, you said US?
URC, yeah.
QRC.
Yeah. Subramaniam and Co.
Okay.
Yeah. According to me, yeah.
And are they bigger than you or smaller than your company?
URC is bigger than us, and Subramaniam and Co. is, I think turnover is, there could be around 100 plus, I think so.
Okay. So can Sathlokhar improve this win rate of 15% to 20-25%? Is that possible? Not possible?
Sir, I am unable to comment or commit at this juncture, but we are working to improve in all possible ways, sir. We are trying to improve.
Okay. And last question, your current team, in terms of number of people and infrastructure that you have, can handle what level of orders or revenues?
Sir, as a company, we have recently completed worth of 250 crore in one particular location. And we also have the other locations, 50 crore, 30 crore, 45 crore, 15 crore, 10 crore, 7 crore, 8 crore. But we have the benchmark of booking orders of minimum of 3 crore. Though earlier years we used to say that 1.2 crore, but end of the day, we pick up sizes of various, but we do have a discipline of based on the order books, we have a structure like if the value is less than 10 crore, this is how the overheads and this is how the team people would be deployed. Whatever said and done, irrespective of volume of and the turnover of the sites, and we always give weightage to central purchase control and labor control, and then project coordination in a successful way in coordinating with architectural, structural consultants of various like electrical, mechanical, plumbing. Everything is being handled from head office. So I don't see any challenges on any number of orders until probably I would say that in case if I am booking one single order of 1,000 crore would be a challenge because the working capital may not be easier for us. But our focus is we would like to pick up more number of sizes like 10 crore, 50 crore worth of orders into 20 numbers instead of taking one project of 500 crores.
Sure. That's very useful. No, I mean, as a whole company in the full year of operation, if your company has to handle 1,000 crore total revenues worth of orders, what is it required? Current team can do it in one full year? Or is it you need to add more people, more infrastructure to execute total orders of 1,000 crores in a year?
Yeah. At this juncture, the company is having owned employee of 285 professionals and 1,422 years. When we are scaling up, definitely another 60% of the things will go up.
Okay.
Yeah.
Okay. And what is the typical working capital? Because there has been significant increase in receivables of 60 crore. There are loans and advances of 46 crore given. So typically for 100 rupee of revenue, what is the working capital required in your business?
In our business model, if we have 20 rupees, we can achieve 100. But when we have 30 rupees, we will achieve better margin in the bottom line. The better negotiation skill is being improved. That's what I said. And the one more answer is we have bid in the month of September 50 crores. Sir. That's the reason the outstanding is shown higher.
Okay. So you have to give advances to whom? So much of advances, 46
Yeah,
crores
vendors.
to your
Vendors.
vendors?
Vendors. When we release the order, if you pay upfront, we'll be in a position to reduce their margin, and they are happy to take money upfront, then they are able to, reduce their margin, and they are happy. As long as the secured way, people are willing to, trim down the margin.
Okay. But usually, working capital is 20% of revenue. Is that what you are saying?
No, I'm saying, like, if you have 20%, if you have 20 crore to achieve 100, if you have 30 crore, we'll do better margin. That's what I'm trying to say there.
Okay. I understand. So you operate where? You try to operate at 30 and get more margins? Is that how you
Yeah,
do?
that's what I'm on the job from post IPO. Yeah.
Okay. All the very best. Thank you so much.
Thank you, sir. Thank you.
Thank you. The next question comes from Siddharth Goel from SOL. Please go ahead.
Good afternoon, Thiago, sir. Am I audible?
Yeah, happy afternoon, sir. Yes, sir.
Congratulations for this consistent growth.
Thank you, sir.
So, sir, I wanted to understand on the debt position, like you mentioned, that we require somewhere around 20 to 30% working capital. So somewhere around 20-30 crores for every 100 crores of revenue.
Yes, sir.
And as you mentioned in the pre-IPO call, that we have enough working capital to reach somewhere around 500-600 crores of revenue, right?
Yes, sir. Yes, sir.
I just wanted to understand, like, how are we planning? How much growth can we foresee with the same level of debt? When will we need to require, raising debt? And how are the plans accordingly?
Sir, the way in which we are now progressing, I'm pretty confident that as a company, we'll be in a position to touch 1,000 crore by 2026 and 2027, sir. If everything goes in with the blessings of God. That's how we are working it out, and we are pretty confident that we'll be in a position to achieve that, sir.
And we will be able to achieve that without raising any further external debt.
Sorry.
We will be able to achieve those revenue targets without raising external debt.
So as such, that's a plan, that's a dream, and we are working towards that, sir.
Great. Thank you. Best of luck.
Thank you. The next question comes from Preeti Jaiswal from SJ Logistics. Please go ahead.
Hello, sir. Good afternoon.
Happy afternoon.
Yes, sir. My question to you is, sir, with EBITDA margins increasing by over 400 basis points, could you provide more detail on your margin expectations by project type or sector?
When it comes to FY 24 H1, 12.96, when it comes to FY H1, 16.38, that's the difference we are talking about, right?
Yes.
Yeah.
Yes, sir.
See, as I mentioned, when it comes to last year H1 and this year, we have learned a lot in terms of order booking in one-stop solution, including civil infra and MEP. That's the area where I had scaled up the business model without, when we executing the structure in the same location, when we execute including the same overheads like security deployment, labor deployment, and the staff quarters. When we are scaling that, for example, when we are executing a structure in a one particular location 100 crore, when we are executing turnkey, which includes MEP works, utilities, everything put together, the overheads of the balance portion may not be even 10%. I mean, in the sense, when we execute 100 crore for structure and skeleton, our overheads are, say, 10%. When it comes to the additional 100 crore, because of the increased expansion works like electrical, mechanical, plumbing, utility, CTP, WTP, the turnover is going up, wherein the overheads are not even limited to maybe 2 to 3% when it comes to civil and infra. That's the area where we are improved from the last financial year to this year. Yeah.
Okay, sir. One more question is, are certain segments more profitable? And if there is any segment that is more profitable, then do you prioritize them moving forward?
Yes, our goal to book with any clients as such instead of booking only structure and skeleton, we would like to convince the clients, including structure, skeleton, electrical works, plumbing, firefighting, data, voice, effluent treatment plant, sewage treatment plant, RO plant, boiler, heating, air conditioning, interior. So we are trying to convince all the clients considering the last 2 years performance, and they are also convinced, and some of the clients are giving us one-point solution. Some of the clients, if you look at even the Winfast is recently booked from a Vietnam company, but as a company, they do have policies that they don't want to give it to everything in one bucket. They would like to have 5 different disciplines, which includes civil and infra, one vendor, MEP, one vendor, utilities, another vendor. So some of the companies, some of the projects, they do have a discipline-wise, they are splitting and avoiding because of instead of giving to one. So we are meeting various times in various expectations. But when it comes to company's policy, we can't no deviate. When it comes to single point of contact wherein the clients are understood the advantage. For example, as I mentioned, Mr. Muthiah Muralidharan, cricketer, is running a company in Sri Lanka for can manufacturing and filling. And when he awarded the contract, 15 months from last year to this year. In fact, by this time only the Campacola up and run in Mysuru. Whereas we have completed the project in 8th month and 17th April, they started running and taking out the juice from the factory. And that's the reason we have given with a happy note that the video clips have been shared by our investors. And if you look at that, the appreciation from clients that because of the advantage given to one single contractor giving a core comprehensive package which includes starting from paddy field, clearing land, civil, P, electrical, mechanical, plumbing, firefighting, data, voice, CCTV, interior, CTP, WTP, interior, complete turnkey, including landscaping. That's the advantage. That's what viewed by few clients. So some of the clients are interested to give one point contact. Some of them they wanted to stick for a simple reason. They deploy project management company to show their performance. They are splitting and awarding. So it's up to the clients and then management to take a call.
Okay, sir, I understand. Okay, thank you for answering my question, sir. Thank you.
Thank you. The next question comes from S. Akhilesh Reddy, who's an individual investor. Please go ahead.
Yes, sir. Hello. Good afternoon, sir.
Happy afternoon.
Congratulations on the good growth in numbers.
Thank you. Thank you so much for the trust and support, sir.
I visited our stall in Mumbai and the experience was very good. However, I noticed that many companies participated in the exhibition. In my opinion, competition is increasing in the industry. What is your opinion on the competition and growth side? Thank you, sir.
Thank you. Thanks for the right question in the open forum, the opportunity for me to explain. Sir, in today's, especially in India, there is no one to correctly communicate that we are here to serve and hand over the building in 7 to 9 months. When it comes to industrial building, we commit rupees 996 rupees for civil and PEB, excluding utilities, excluding extra works, excluding compound wall and filling. The commitment from our company is different than the other competitor company. They pick up projects. Some of the PEB companies have expertise in their order booking. Civil companies are showing interest in booking the civil works. Whereas when it comes to Sathlokhar, we are providing single point contact to hand over the building on time. Over and above, we facilitate the production machines are being positioned inside the factory with the electrical power, with the piping, with the airline, with the pneumatic line, with the SS piping, with the process piping. Complete integrated solutions are being ensured by Sathlokhar, wherein they start run and producing the products on time. That's a competitive advantage we have given to various corporate companies. If you look at even the stall, our own team members would have explained you the number of clients we executed in India. 80% of the clients are international clients than the Indian clients. Of course, we are working with Godrej now, Reliance now, and other Indian companies. But the point here is that the advantage for an international company to look at Sathlokhar is one-stop solution, wherein this company is giving complete design solution, not only limited to civil. We provide architectural services, we provide pre-engineering material design services. We are getting our design from Anna University and IIT wherever based on the client requirement, and we provide electrical design solution, plumbing, firefighting, data, voice, CCTV, ETP, everything is, see, in any project, designs are very important. The advantage here, whoever is coming to our company, they are getting complete design solution and approval facilitation. We provide complete facilitation to the clients to get the approval in terms of blueprints. Like we know our architect, our design team pretty strong. Around 12 to 15 people are working with our design, and we provide inexpensive way of designing and trimming the unwanted expenditure, and over and above, we submit to the third party like Anonymity to vet our design and then proceed for construction. That's how the discipline of the company, and we would like to protect our team because end of the day, Sathlokhar is families, Sangeeta, Tyagu, Lokesh, such is the family name. We want to grow like over a period of time. I would like to demonstrate that this is a mini L&T in India.
Okay. Thank you, sir. Thank you for your detailed explanation. All the best for the coming future.
Thank you, sir.
Thank you. The next question comes from Sagar from HNI. Please go ahead.
Yeah, am I audible?
Yeah, audible, sir. Happy afternoon. Welcome.
Yeah, thank you, sir.
My question, sir. Sir, I have two questions. So the first one is, what is the typical timeline for executing an order?
Sir, if you look at, it depends on the client requirement. And as a company, we book projects 9 to 12 months, sir.
Okay. So in that case, considering the number of, the orders that you are working on, which is 5,000 crores plus, and assuming the same conversion rate which you historically achieved about 15%, is it safe to say, next year we are looking at 800 crore plus kind of top line like FY26?
Sir, as a promoter director, my dream is to increase this turnover, and definitely we are on the job. But however, we are looking at the minimum of 40% growth and maximum of God's blessings.
No, sir, I get that. But I'm just doing mathematics here. 5,000 something crores of, orders that you are working on, 15% plus conversion ratio. So that gives you whatever 800 crore plus kind of number for next year.
We are sure that we will be in a position to book the numbers which you have mentioned, but we are working towards it. Definitely, we are pretty confident in converting the success rate minimum of 15% for sure. Yeah.
Okay. Excellent. Thank you, sir. Thank you.
Yes, sir. Yes, sir.
Thank you. A reminder to all the participants, if you wish to register for questions, please press star and 1 on your touchtone phone. The next question comes from Kunal Jugdankar from M-Wealth. Please go ahead.
Hello.
Yeah, happy afternoon, sir.
Yes, sir. My question is, like most of our projects were in specific, concentrated in specific states. So how we are planning to diversify in like our geographic footprints?
Sir, as such, we are already in Varanasi and Chamra, Mysuru. Now we are trying to again strengthening the location where we already pitched in, like same Uttar Pradesh and Karnataka. And now we are scaling up and trying to expand in Odisha and Andhra since the new government, and they are taking a lot of initiatives. I'm sure Chandrababu Naidu ji, especially my neighboring state and the Odisha, both the states are looking at, and probably next one decade will be a really successful state like Pune and Chennai.
Okay, sir. Thank you. Thank you.
Okay.
Thank you. The next question comes from Krupa Desai from Electrum Capital. Please go ahead.
Hi, sir. Am I audible?
Hi, happy afternoon. How are you?
I'm fine. How are you, sir?
Yeah, go ahead, ma'am.
Sir, firstly, congratulations on good set of numbers. So my question was that I understand that we have to pay advances to our supplier, but can you tell me when will we become OCF positive and what will be our average working capital day cycle going ahead?
When it comes to vendor, for example, when we are releasing an order of 1 crore to a particular vendor, usually we used to get to give 10 to 15% while releasing the order, and they would be taking with some margins or more. So we would like to further squeeze down. Then we'll pay 20 instead of 20%, we pay 30%, wherein we would like to ensure that the our margin is scaling up. Yeah.
No, sir, my question was, what will be our average working day cycle, and when will we become the cash flow positive? Right now, we are cash flow negative, right? So,
No, that is because we have billed 50 crore in the month of September 2024. Usually 90 days is the working capital cycle. Yeah.
okay.
Ms. Desai, you have any further questions?
No further questions.
Thank
Thank
you.
you.
The next question comes from Sridhar Jadhav from JM Financial. Please go ahead.
Sir, just wanted to understand if we are seeing any
Sorry to
big
interrupt.
orders.
Mr. Jadhav, you're sounding a bit muffled. If you're using speakerphone, may we request to use handset, please?
Yeah, is it better now?
Slightly
Yeah,
better.
yeah. Go ahead, sir.
So just wanted to understand if we are seeing any repeat orders from our existing customers. For example, any big orders from Reliance, Godrej, SP Group?
Yes, sir. As you mentioned, I am working with Reliance Multi-Model Logistics Park in Chennai, and even Nagpur also, again, a multi-model logistics park wherein NHML, National Highways, they are tying up with the repeat orders, and we are working with the other companies like Kemin, US-based company, SPFRS Limited, it's a repeat order from a company. Those companies are, we are constructing fourth factory and second factory in currently, sir. Yeah. And even Uttar Pradesh also, we are going to construct again BD Foods Private Limited, wherein the negotiation and discussions are happening now.
So, sir, with these repeat customers, with this repeat large order book, can we say that going forward, our win ratio on the incremental projects would be higher, or this 15% is specifically for new customers?
Sir, as I said, till when we submitted the number of clients, we have submitted to worth of 5,795 crore, and if you look at the total number of clients are 450. Definitely, the people, the clients like Mr. Muthiah Muralidharan is giving continued orders to Sathlokhar, wherein he wanted to construct Pune also. Now he talked around. He is now working with Pune, one more new project, and in across India, Campa-Cola, for example, Pepsi is having 195 lines production, and Coca-Cola is having 265 lines production for the to ensure the India market, catering the India market. Then when it comes to Campa-Cola, it's a new company tied up with taken over by Reliance. Now they have got only 9 to 10 lines, and both the factories are constructed by us, and they are planning to have at par with the Pepsi and Coke for next 1 decade. They would like to have various manufacturing segments, and at this juncture, we are the preferred EPC turnkey contractor who ensure 2 factories constructed in 8 months and 6 months time, both Varanasi and Mysuru. So obviously, the expectation from Reliance would be towards Sathlokhar would be the benchmark company for their preferred EPC turnkey contractor, sir. So definitely our percentage of success rate may go up. That's what we are working towards it.
Yeah, understood, sir. Appreciate that, with your clients growing, your order book and profitability would grow. So my next follow-up question is, are we the exclusive EPC vendor, or there are, other players also, like, for example, in SP or a Godrej or a Reliance, when they set up new factory or when they have expansion plans, are there multiple contractors, or you would be currently enjoy an exclusive kind of a relationship, at least in the states where you have demonstrated your track record?
Sir, for an example, SPFRS Limited is a NSE listed company, and they are listed in 2015, and we are constructing their fourth manufacturing facility in Tamil Nadu now. And they have plans every 2 years. They are constructing, they are scaling up their business. And similarly, Reliance also, they have plans to increase their region-wise. They are trying to explore for Campa-Cola and some of the other consumer products. And Godrej also now, we are working with Godrej at this junction in Chennai. They do have plans to construct other factories across India, but at this juncture, two factories are under pipeline with Godrej, and tenders are expected soon, sir.
No, no, sir. My question was that, so for example, take the example of Reliance, Campa Cola. So if they want to set up 5 new factories, so will all of the 5 new factories come to you, or it is like 3 may come to you and 2 may go to your competitor? That was my question. Like, do we currently enjoy an exclusive kind of a relationship?
At this juncture, I would like to say that for Reliance, we have constructed Varanasi, we have constructed parallelly Samrajanagar. Hopefully, I expect the same support blessing from the clients. That's what I'm trying to say that.
Okay, sir. Yeah.
Thank you. The next question comes from Siddharth Goel from SOL. Please go ahead.
Yes, sir. So, pre-IPO, sir, you had mentioned that we are creating a separate vertical for solar.
Yeah.
So, and we are also the authorized channel partner for Tata Solar, right?
Yes, sir. Yes, sir. Yes, sir.
So I just wanted to know, okay, what is the progress on that?
So as such, we are trying to capture the residential segment since the Pradhan Mantri scheme is available now, and we have scaled up earlier strength from the solar. Now we are increasing the our solar vertical in order to increase the turnover of solar itself in a different number, including greenfield solar projects and rooftop projects and residential projects. All the three we are working towards now.
Okay. So, and how is the margin profile as against the other EPC work that you're doing?
Specifically, if you look at solar, is definitely we'll be in a position to ensure 15%. Yeah.
Okay, so similar margin profile.
Yeah, yeah. So fast track projects, sir. When we are executing solar, within 3 to 4 months, we'll be in a position to complete. The cycle of business is maximum 4 months.
Okay, so the turnover ratio will be faster.
Yeah, that's what I'm trying to say.
And like we are the authorized channel partner for Tata Solar, so are we just using the solar for in whatever plants that we are manufacturing, or are we taking separate projects for just putting up the solar panels?
Actually, between Sathlokhar and Tata, like even Tata is encouraging us wherever we do exhibition, wherever we do give advertisement, they would like to become partner in even advertisement expenditure also. They would like to contribute. That's what they are trying to have a better understanding with Sathlokhar. So we are very much in connect with Tata Group, and they are supporting us a lot in terms of supplying panels on time, complete solution including design and energy concern. Everything is being taken by solar Tata quality team. Yeah.
Okay. I didn't get the advertisement part. So as in like advertisement.
Advertisement, I mean, like even today, if you look at, I have given a big advertisement in Chennai. Whoever is checking in Chennai airport, around 6 screens are being visible to see that they have to cross through without seeing my company advertisement. They can't check in. That's area where I have given display. Similarly, Coimbatore airport, same way, Madurai and Thoothukudi. So I have taken wherever the potential leads are expected to in terms of chairman, vice president, CEO, or GM, or deciding people who are traveling in various segments. I have given advertisement. Those locations, our advertisements are very much visible, and they would like to capture, and we will be getting the calls.
Okay. And they're willing to share expenses for those advertisements.
Yeah, definitely, sir.
Okay. Great. Thank you so much, sir.
Thank you, sir.
Thank you. As there are no further questions, I would now like to turn the conference over to Ms. Kajol Gowda for closing comments.
Thank you. Thank you everyone for joining the earnings call of Sathlokhar Synergies ENC Global Limited. If you have any queries, you can write us to at info@akmiladvisors.com or kajol@akmiladvisors.com. Thank you.
Thank you all.
Thank you,
Happy
sir.
day.
Thank you. Happy.
Thank you.
Thank you.
Thank you.
See you, sir. Thank you.
Thank you. On behalf of Sathlokhar Synergy ENC Global Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.